Buy or short Yelp? That's a good question. The thing that baffles me about Yelp is that current market capitalization is 6.5 billion. What market capitalization is, it's the price of the stock right here, right? Currently 94.70 times the amount of outstanding shares. And the amount of outstanding shares for this stock, if I go to key statistics on Yahoo Finance, I could see that the outstanding shares, let's see, are 68.86 million. And that's how we get to the 6.5 billion, multiplying those two numbers. So why is Yelp worth 6.5 billion? Generally, companies that have only $232 million worth of sales aren't worth 6.5 billion. Now, this company is also interesting to note. This company has no net income. It has not made any profits yet, and the stock has gone up 344% in the last 52 weeks. So, is this stock caught up in some kind of internet bubble? One rationale I can think for why Yelp is so high is that when you have a mergers and acquisition news or frenzy in the space, the internet space, such as Facebook's recent acquisition of WhatsApp for 19 billion, you could see that a company like Yelp, if they're valuing WhatsApp at 19 billion, a company at Yelp, which is at 6.5 billion, doesn't seem that overpriced. However, if you think about Yelp's potential, will this be a multi-billion dollar company in revenues? I particularly, right now, I don't see that for the near future. So why are investors so anxious to buy Yelp and trade Yelp higher? And this might be because it could be an acquisition target, and someone might come out like a Google or a Facebook or a Microsoft and offer to pay $200 a share, valuing Yelp at about 13 billion. Possible. I mean, I wouldn't buy the stock based on that speculation. The looking over the key statistics, it's interesting to note that they have a PE, a forward PE of 255, extremely large valuation, a book value of $7 per share, a short percentage ratio of 17.4%. That means 17% of the outstanding shares of the float are sold short. Now that's a high percentage of short. So there's a lot of people buying a short position or selling short in the stock, uh, which is extremely risky because there's unlimited losses when you sell short. If you buy a stock, the most you could lose is from the stock price down to zero. But when you sell short, you can lose unlimited amounts. If Yelp goes to 500 a share, 800 a share, you're losing along the way. There's no limit to what your losses are. So this is sort of putting your money where your mouth is. So people, 17.4% of their outstanding shares are sold short. That's a strong voice that people feel that this stock is overvalued. And typically the only people who sell short are sophisticated traders who have generally a little bit more experience than the average trader who only generally buys stocks or goes long. So that is a little worrying that they have a large short position. They seem to have sufficient cash. Revenues are growing. Revenues grow by 71%, which is really a great sign. And one of the reasons that the stock is trading so aggressively high. If we look at some other information. I'm curious on the profile where they are located. Okay, so they're from San Francisco, which is Silicon Valley over there. And we all know what Yelp does. It's an app that can help you find restaurants or clubs or bars, information about arts, entertainment, nightlife, various things. If we check out, I am curious about. Let's look at the charts on this stock. I'm going to call up a basic technical analysis chart. And I see since May, really all this growth has occurred since May, which is pretty staggering. I mean, if I put up let's put up a 2-year chart, and you could see how much growth there's been since the May the May price, which was under $20. So that's, almost a five-fold increase. Incredible. Let's look at some moving average. I want to bracket it with a 100 and a 200-day moving average, and we could see on these moving averages. Let's see if I make this chart a little larger, but okay. So on this 200-day moving average, we could see that the 100 crossed over the 200, which is technically a buy sign, and we can see that as long as the stock's been trading above the 100 above the 200, that's technically a buy sign. And now that we have the stock price above the 100 and above the 200, that's also technically very strong. And we can see up here, if I'm going to shorten the duration of this chart, let me move this to 1 year. Okay, so this happened in May. So this was the buy signal when the 100 crosses above the 200. That's a strong buy signal. And then when you have the stock price above the 100 and above the 200-day moving average, very strong signal. And we have some testing of the 100 becomes the support level. So we could see that it's bouncing off the support level once, twice, almost 3 times here. So the support has been very strong. Whenever the stock has touched the 100-day moving average, it's bounced off of it, which is also a very strong sign for the stock. So again, if I would have saw this chart back here in May and I saw the 100 cross over the 200 with the stock price above both moving averages, I would have purchased the stock for sure. Now it still looks, technically the stock looks healthy, and it would be a stock that technically it's saying it's going to continue to move up, which is very interesting. I want to look at the RSI, Relative Strength Index. And on this stock, the Relative Strength Index is at 80. Okay, so that technically would be a sell. Whenever the RSI touches or goes above 80, technically you should sell the stock because it's bound to go the other direction. We can see over here in May, well, pre-May, somewhere in April, it reached, the stock touched upon 20 on the RSI. The RSI only goes from 0 to 100. Whenever a stock is at 20, you should buy, and whenever the stock touches 80, you should sell. And if you look here, it did go above 80 at this spike here, which could have been an opportunity to sell, and then it retreated down and then spiked up again to 80, which could have been another opportunity to sell. And recently, there's another spike here, a small pullback, and then we're another touch. So this would say that it looks like it's not quite at 80 or above 80. There could be a couple more days of rising prices with YELP, but at some point it should trade lower according to the RSI as a technical icon. Now I could also wrap it in a Bollinger Bands, which are standard deviations from the norm, and we could see that the stock price is not quite touching the upper Bollinger Band, which whenever it touches the upper Bollinger Band, that is generally a signal that statistically it's at the maximum of what the standard deviation would say for an increase in stock price. So the Bollinger Bands basically put the dispersion of stock price and wrap it around the a standard deviation between, I guess, the median of what the variation would be, and the top would be the standard deviation. I guess the return, the stock price plus 1 standard deviation, and the stock price minus 1 deviation. Although some Bollinger Bands are 2 deviations, and this could very well be a 2 deviation Bollinger Band. I'm not exactly sure, but either way, it's not touching the top of the band. So it looks to me technically that this is still a buy, and it looks like it has some ability to reach 100. I would say at 100 it's probably going to be touching the top band and above 80 on the RSI, which technically would be a sell. So technically owning the stock is a little dicey. I personally would be very skeptical of this large short percentage, because a short percentage of 17%, I'm very uncomfortable when stocks go above 5 or 10% of shares outstanding sold short. it can get a little scary at that point. Okay, if we look at, let's see, analyst opinions, looks like most of them have upgraded, one downgrade, and let's see here. As far as, let's go back to the summary. Okay, so let's give an idea of how big the 6.5 billion is in comparison. Okay, we can look at Dunkin' Donuts. That's 5.5 billion in market cap. Not quite 6.5 billion, but if you look at Dunkin' Donuts, you can see it's at $51 a share. Under the key statistics, Dunkin' Donuts has $713 million dollars worth of revenue and a net income of 145 million. So it's a profitable stock, and its revenues are growing not quite as fast, only at 13%. And this also has 10% of its shares sold short, which is, I think, a big warning sign for a food-related company. Let's look at the technical analysis of its chart. And we can wrap this with a 100 and a 200. And we see that over here it broke through the support, rebounded. So it's still in a okay position. Stock price 100-day, 200-day. This little break of the support is a little worrying. If we let's take a company that's not quite as, let's look at, let's see, Burger King. Let's try Wendy's. This is probably about a 3 billion. Let's look this up. Wendy's. 4 billion. Wendy's is a $4 billion market cap. And we'll see. Let's look at their key statistics on Wendy's. And they have 2.5 billion in revenues, 37 million in net income, and 12% sold short. So Wendy's is, it has gone up 79% in the last year. So Wendy's seems. Let's look at a really big company like McDonald's in comparison to all three of these companies. Okay, so McDonald's is a $96 billion company, one of the biggest companies. And if we look at their key statistics, we can see that it has 21 billion in sales and only 1.3% sold short. And that's more typical. Most stable stocks or correctly valued stocks have a short percentage of float between 0 to say 4% on the high end. And we can see that their net income is 5.5 billion. It's just a ginormous company. Okay, so just to recap here, if we look at Yelp as a company, it's quite baffling at this very high valuation for such a company with so little in sales and no profits. But if we look at in terms of the last phases of the bull market pushing it up, which is when you see stocks like this go up fivefold, it's generally a signal of the last stages of a bull market. And the high short interest shows that most of the educated traders probably sold the stock, recorded their profits, and now are selling it short because it seems like that's a better bet than having it longer. I myself would probably would not be so daring as to sell it short, but I could buy some puts to cover it on the downside. Okay, so that's it for my review of Yelp. Please remember to like and subscribe this video. Talk to you next time.